What happens when a tech guy and finance guy decide to transform how Asia invests? Meet Greg Van and Sam Rhee, co-founders of Endowus, Singapore's wealthtech rocket ship. They've built one of the region's fastest-growing investing platforms with over $10 billion in assets. And they're just getting started. This week on 60/40, we unpack how they did it, what they're betting on next, and play a quick game of superlatives to find out who's really the boss.
Welcome back to the 60/40 podcast. I'm Maria, and I'm so excited to be in the studio today with the co-founders of Endowus, Gregory Van and Samuel Rhee. Welcome, guys.
Great to be here.
Great to be here.
Together, Greg and Sam lead Endowus, a digital wealth platform headquartered here in Singapore. The firm was founded in 2017 and has been a pioneer in the wealth tech space here, including being the first in the country to allow CPS, SRS, and cash savings to be managed in one unified platform. And today we are going to be going through their founder journey, what it's been like really kind of growing and building the business together. And yeah, excited to jump into this conversation. So I guess first things first, I have to say congratulations on the latest fundraising round that y'all just announced. I think $70 million raised with over $10 billion in client assets. How does it feel?
Honestly, it feels like we're just getting started.
Okay.
But I think, from the very beginning, we've had a very long-term vision and long-term commitment to what we're trying to do at Endowus. So I feel like we've taken very measured steps to getting to where we are right now, but a lot is still ahead of us. Obviously, it's great to get the fundraise done and have the fuel to keep on growing and pursuing our mission.
Yeah, no, it's good. Good to get it done, first of all, right? Any fundraising is a tough fundraise. It drags on longer than you think. There's so much more details to take care of. And so just getting it done is a great thing to achieve and also get out of the way so we can get on with the business of building the business, which is what we really enjoy and love doing. But it's great because we have some great new investors. We have some amazing existing investors continue to support us. So that's why we're able to build the business we want to.
Yeah. So, I saw from the press release reports, but one of the main things that y'all are fundraising for is to also start to build out a B2B business. Can you share a little bit more about this product line, how it came about? Has this been something that's always been in your product roadmap, or has there been inbound interest and it just makes sense to naturally expand to?
Yeah, I think it's one of the things that we want to invest in, but I think it's probably a smaller priority versus the bigger goals that we're trying to pursue. The first is to continue to build on Singapore as our core home market that is, expanding quite rapidly at the moment. I think we're really hitting that stage where we're, hitting exponential growth here in Singapore and dominating as the leading digital wealth platform. I think clients are resonating with our business model of providing truly independent, conflict-free advisory services, giving them access to some of the best investment solutions out there, and doing it at a cost that was unimaginable before Endowus arrived. So I think that's the clear core. We don't want to lose sight of
you're
the
doubling
core
down
business.
on Singapore.
Yes, doubling down on Singapore. We want to really scale Hong Kong, which is our second market. And, we're not one of those guys that build a pretty app and launch it in 5 markets and say, hey, we've gone to 5 new markets.
Yeah.
We really have to build the infrastructure, the operational pipes, with deep, fin as well as deep tech, as we call it. And so, pension, distribution of financial products, fund platform, alternatives, all of those things require a lot of heavy tech build. And so we've done that in Singapore and we're doing that in Hong Kong. So really excited to continue to scale Hong Kong. And then the new business opportunities, such as alternatives, such as B2B, come into play. And the B2B is an exciting space because, Endowus is a very missional, purpose-driven company. We want to try to offer an alternative business model that is better than what existed before, trying to really serve the customers and do our fiduciary duty, leveraging technology. And so we want to offer that not just in the direct-to-consumer business that we're building, but also in the B2B space where I think financial advisors want to do more. They want to provide investment solutions and investment advice, but they're, in a way, hampered by the lack of technology, by the lack of good resources, lack of access to good investment products. And so a lot of what we've done in the direct-to-consumer space, I think, are applicable to the B2B space. So we want to really serve the financial advisor community so that they can serve their customers better.
Yeah. So I definitely agree with what you said. It feels like Endowus has taken a very targeted approach. Obviously, you're really just in Singapore and Hong Kong. Do you ever feel the pull, or do you have plans to start expanding into new and additional markets? I feel like this is something investors always ask for, and then it's easy to get persuaded and swayed into and pulled into like a much larger decision than what you originally anticipated.
I think in something like wealth and in a very regulated space, going deep is critically important. And we always say, we don't want to spread ourselves too thin. I think we have to think back to when Endowus started, and we were actually self-funded for 4 years, really building technology and a team that would commit for the long term to solve for, the pains of pension management, delivering conflict-free advisory, providing access to a suite of products that maybe we, generally could not access before, and at a low fair cost, but also, digitally and conveniently and with transparency. So I think it takes a long time, and also because we're in the business of wealth and not, for example, wallet payments, trading, other fintech. Fintech gets grouped together in one thing, but we're in a very specific business line. We need to focus on the customers that we can help most at this stage, and also given the way we run the business. So we transparently charge an asset-based fee. So also, which is why Singapore is a very attractive market. We think retirement adequacy is critically important in Singapore, with demographic changes and things like that. And it's a similar situation in Hong Kong, where the wealth per adult or savings per adult is sufficient, but may not be sufficient to maintain the same quality of life later in when they retire or later in life. And therefore, deeply solving this problem and getting to better outcomes in these markets is critical. Singapore and Hong Kong are also, they export wealth services to the regions that they serve and the people that they serve. So they're very, very important wealth hubs, we believe, for Endowus to really go deep before we get, maybe distracted to go elsewhere. But I also think, with resources, you have the option to expand into other markets. So, and partnerships. So we're constantly looking at that as well.
Yeah.
And I guess just to add, I think obviously we have ambitions to go regional, much more broader into multiple new markets. And you're right, investors do push us sometimes to do that. But I think, over time, our shareholders and investors have come to understand kind of the difference that Endowus has in the way we build the business, and that those differences actually create really big moats around the business. And that's what's been especially exciting and rewarding for us here in Singapore especially. And Singapore, I think, is one of those markets where, as Greg said, we export a lot of wealth services, and therefore the scalability of the business is actually much bigger and beyond the Singapore market alone. Having said that, Singapore wealth market is a $3 trillion market. It's big enough.
It's insane.
Yeah, it's insane.
Yeah.
And we've gone in 5 years, we often talk about Bill Gates' quote about how we underestimate how long it takes.
Overestimate.
Overestimate. So I was trying to correct. We overestimate what we can achieve in 1 year. We underestimate what we can achieve in 10 years.
Yeah.
And so, yes, our ambitions are there. We want to go to new markets first. We do want to go to other markets as well. But it takes longer than we think in the short term. But in 10 years, we've actually, 10x'd.
Yeah.
In 5 years, we've 10x'd. And so I think another 5 years, if we 10x again, we're going from 0 to 100 billion.
Actually, Sam, in 4 years, we've 10x'd.
Sounds good.
Okay, so, and obviously markets have been quite depressed over the last few years. And so any differences in terms of this fundraising round versus previous ones in terms of how long it took, maybe not level of interest from the market per se, but some of the macro issues that you were kind of facing?
Yeah. No, it's kind of weird that public markets and stock markets have been really great.
Yeah, ripping.
But the private markets, especially venture, and especially in this
especially
region,
here, I think
has been especially painful.
Yeah.
Having said that, I think that we've been very lucky. We've actually had a lot of reverse inquiries in because of the unique business that we're building here in Asia. There aren't too many companies that are focused on long-term wealth building, advisory-led wealth, pension, which are unique business models. And so I think that we've been, lucky with some of the investors and the quality of the investors that we've received inbound inquiries. And so a lot of the fundraising for us comes because investors come to us first rather than us going out and explicitly starting a raise.
Yeah.
And that's, organic, and that's good.
Yeah.
And I think it's good because we align our interests early on.
Yeah.
And we're all about alignment, right? We're aligned to the best interests of our clients. We're aligned to our employees and our partners. But shareholders and investors is critically important because of the business we're building. Like when I started with Greg, I said, this is a 25-year journey. And so we're 7 years into it, 8 years into it now. But we still have a long way to go. That's why Greg is saying it feels really early. And a lot of our investors are permanent capital. They're not VCs. And so it was intentional that we aligned our interests with our investors and shareholders in trying to be long-term in our vision, knowing that there'll come an inflection point where we do become exponential. And that's happening right now. And so I think it's really good that our investors are supporting us in the right way.
And then for division of responsibility, are you more the fundraising guy? The way you're talking, or because it's obviously a very intensive. It can be an all-consuming process, distract you from day-to-day operations.
We have a small team. There's only 4 guys in the deal team, and so Greg and I both play our part.
Okay.
I think that I have the financial kind of fundraising kind of and investing background.
Yeah.
But Greg has the ability to bring in new leads and converting really well. And we're both needed because all investors want to meet both the co-founders,
of course,
right?
Yes.
And we're still at that stage where we can't delegate. The CFO can't do the fundraise. The founders have to really lead the fundraising process. And we are not only the face, but we probably do the most important part of fundraising as well. So we have a great CFO. We have a great legal team who executes with us. But Greg and I still have to take the lead. Yeah.
Fun.
It is. I mean, It's necessary. It's necessary. But I also think it helps us crystallize a lot of what we're trying to do.
Yeah.
In the process.
Right. Like telling the story, putting together the numbers and the decks.
And we get feedback, right?
Yeah, true.
We get feedback on what people have seen in other places. I mean, we can take some of it, we can throw some of it out. But it is an important process to sort of connect with the overall community.
But the fun thing is that actually a lot of investors come to us, we engage them, and they don't invest. But almost every single one of them become clients.
Okay.
But actually, well, that's true. But actually, for almost all of our shareholders that have, I mean, as Sam was mentioning, have been reverse inquiry, a lot of them were clients of Endowus or have been clients of Endowus for a long time.
Then they're like, I love this product. Other people love this product.
Like, I put all my savings into this product.
Right.
Right. And increasingly so.
Yeah.
And they can obviously track us and watch us develop. What annoys me the most is when we have these discussions and they're not Endowus clients when they're eligible to be.
Right. You're like, you don't even know what you're talking about.
But then they say oh, but we love your product, we love your platform and all this stuff.
Right.
And, so are you using it? And they're like,
Yeah.
I was in the process of onboarding.
I couldn't get my OTP.
I went on the website once.
No, but what's worse is if they're not a client, they're not going to invest, but they criticize us for building it in the wrong way.
Right. And you're like, come on, dude. Yeah. Fair enough.
Do you even know the space?
Yeah. Hey, well, they effectively took themselves out of the running to be a potential investor. You're like, thanks, but no thanks.
Yeah. Exactly. So
Okay, I want to go back in time a little bit and hear more about your founding story, how y'all two met originally. I've heard a little bit about this from Sam before, but it'd be great to hear it. I think you both tell it together. And so where did the idea really originally come from? How did you first meet? What were your expectations from the beginning? You said you knew you were committing to a 25-year journey from the get-go. Yeah, take us back.
sure.
How we started first, yeah.
Okay, so I
The
mean,
idea.
I think, well, it went back to trying to invest for ourselves. I think that's critically important, and our families. And a part of that pot was actually investing CPF money, which accumulated to be quite big.
It's a decent amount.
Yeah. I mean, my wife is Singaporean, so and she had been working as a professional for a number of years. And I was shocked by how much CPF she had accumulated.
I was going to say, as an employer, I see what we pay out in CPS as well. And I'm like, okay.
Yeah, it's a very, very serious amount of savings. And then, coming from the financial industry, and when I started in investment banking at UBS, we were mostly talking to sovereigns and pensions and endowments about how they asset allocate. And I was just very shocked by the investment options that were existing for CPF money at that time, given that it's very long duration or long time horizon money for your retirement. And at that time, a friend and I, who was Singaporean as well, he later had to get pulled into a family business. But a friend and I were like, okay, this is shocking, right? I mean, how is it that it's so high cost, so high friction, and the options are not like the very logical options of, for example, low cost indexing are not available for CPF money. And I was at Grab at the time. I was very lucky to have been a part of the team to start the payment business there. So I had this financial and then technology sort of experience, seeing how technology can really scale an experience. And I said, well, we don't want to start, a traditional business to try and solve this. Like, technology can definitely solve this. It's something where excellence can be definitely scaled to millions of people with a technology experience. So 2017, I left Grab. Early 2017, I left Grab, and this guy left his company, which was he was running a family office at the time, to set up Endowus. Very soon after, he had to, he had a family calling, and he had to go back and work for the family, but he promised to find himself a replacement. And he actually went and seeked and found Sam, who I met later that year.
Do you know how?
So I was on my own journey. I'd left Morgan Stanley after a 17-year career. I was having a sabbatical and enjoying it. But I was investing. Like angel investing in fintech, and I saw the potential of financial technology at the time, 2016, 17, right?
Yeah.
And then, so I was in the fintech space, right? And then a friend of mine who was a VC, John Kim, I don't know if you know, he said, hey, I have a friend doing fintech, you should meet him. And I'm like, yeah, but fintech's kind of broad. You know? What is he doing? He goes, I don't know. You should just meet him. I'm like, okay.
Strong recommendation.
And it just took like forever for us to find a time. And that was the other friend.
Okay.
And then we met, and then he roped in Greg, and the three of us got connected, and we were talking, and like it was like a meeting of minds, right? Who shared the same kind of problem statement. Like, I was trying to invest my own money. I mean, I hated using my old bank, private banking services.
Because it's expensive.
It's just, I think, especially for employees, I think the quality of service is just not there.
Yeah, okay.
You don't get financial advice. You don't really get access to great products sometimes.
Yeah,
I mean, it's not really great. Even for people like private banking clients, I really feel that advice is very lacking. Products are sold, they're not bought.
Yeah.
And also cost is exorbitantly high. They're eating away into your returns like crazy. And people don't really see that. And so those problems exist, and both of us, saw that. We wanted something better for ourselves and our families. And then the other part is that they discovered the CPF pension kind of problem bottom up.
Yep.
I was looking at it from a macro top-down perspective. Global like pension shortfall is a massive crisis, and also retirement adequacy is a major societal problem. And I saw that firsthand in Korea and across the whole region. Many of the big countries like China and India, massive pension shortfall problem. And as the population ages, it's going to be the biggest impending human disaster, tragedy that's waiting to happen.
Totally.
And imagine a whole nation working until they're old and then discovering that they haven't saved enough or invested enough, and they're going to live in poverty for the rest of their lives until they die. I mean, that's a tragedy.
Yeah.
So we need to work to avoid that. And I'd been meeting with a lot of robo-advisors and people in the wealth tech space, and everybody was doing it wrong.
Oh,
and I couldn't
interesting.
invest in any of these robos. One of them even offered, a Korean robo offered me like 75% ownership to launch their robo-advisor in Singapore to expand into the region. And I was like, I can, but not with that model. A lot
Why
of the
were they doing it wrong?
A lot of the robos, when they transitioned the business model from the US, where it originated
Like
from,
Wealthfront and
Wealthfront,
Betterment.
Betterment, Wealthsimple in Canada, Nutmeg in the UK back then. They are like the right model, really low cost, accessing ETFs, passive index funds, and doing it very passively.
Yeah.
And then using like things like tax loss harvesting and
Yeah.
things that actually give you a bit of an advantage as an individual investor. In Asia, there is no such thing as tax loss harvesting. There's no real low-cost ETFs in local markets, especially back then. And the way they were building the business model was to create like a tactical, some kind of algorithm to beat the market. So effectively, they were just building a crappy quant fund at high cost.
Yeah.
And not very good returns coming out of that. And that's why none of the robos have really scaled in this region, because I think fundamentally we believe the business model is wrong. And so that was the journey. And then when I met Greg and Yuning, it was like, oh, wow, these are the guys that, and so initially I just wanted to invest.
Yeah.
But then, I guess Greg and Yuning kind of wrote me in. And then after that, it was, the rest is history.
Yeah, and I think, we were so trying to invest holistically was a critically important thing to solve. So when you're like, okay, so CPF is obviously really big, and I want to invest CPF well. Why are these options not available? And we just kept on, or I just kept on asking why, until getting to a flawed truth of the industry, which was it mostly runs on commissions. Okay. And at the time, the people who were servicing that market could charge up to 3% sales charge. And even to this day, when they sell a specific fund, they get what you call a trailer commission or a trailer rebate or a retrocession. There are many names for it, from the fund manager for putting their clients into that fund. And coming from the institutional side of the business, I was shocked that this was even a thing.
Yeah.
And then you realize that almost all fund distribution in the world, except for places where this is no longer legal, almost all fund distribution in Singapore and all of Asia runs on retrocessions. It runs on trailer commissions. So all the distributors from the big banks and brokers and even online platforms, they are making a trailer fee from the fund manager by putting their clients into those funds.
Right. So then you have to ask, where's the incentive alignment?
Correct. And, Charlie Munger famously said, show me the incentives and I'll show you the outcomes. And this is a prime example of where incentives are just systematically misaligned. So you have the transaction-based fees to encourage churn, and then you have the trailer commission to incentivize pushing of high commission product. And people are surprised that they don't do well when they try to manage wealth. And I was like, or we were like, whoa, this is a huge systematic issue. It's not that it's not allowed, right? It's totally legal.
Yeah.
But it needs to be exposed, and we need to provide the supply of a platform that is conflict free
You just give people a better alternative.
to lead to better outcomes. So we need to provide the supply
Yeah.
to create the demand.
Right.
And I feel like we're just reaching that point now where people are starting to understand this idea more. And, they can make their choice
Yeah.
on what to do. But really proliferating this conflict-free model in wealth will have enormous impact downstream, not just on Endowus and its clients, but the entire industry.
Yeah.
So again, that's why it feels like it's so early.
That's awesome.
Yeah.
So then from the first meeting, I mean, you had gone in needing to replace your original co-founder. And so were you like, okay, you're like already checking Sam out. You're like, let's see if this is the guy. And did you know from the beginning that you wanted him on board as a co-founder?
Sam was the only one.
Hey, it only takes one. It only takes one.
There's only one Sam.
There's only one Sam. Actually, I shouldn't say Sam was the only one. There's only one Sam. It's both. So a lot of people, obviously, we had spoken to quite a few different types of people, but I think very few of them were willing to ask very few of them were willing to say, you know what, this is the right thing to do, so this is what we should do. And this is what I am willing to commit the rest of my working career to. Even within the industry when we started Endowus and before Sam and after Sam joined. So Sam joined very, very early on, right? Even fund managers were like, oh, what you're doing is the right thing, but it's really hard.
Yeah.
I don't think it's going to work. It's going to take a really long time to work. Whereas that was never the case with Sam, right? Sam was like, oh my God, this has to work. And I think as co-founders, you need to have that attitude because we are in it for the long haul. And it has to work not just for our sake, but I think for the sake of just general evolution of the industry, so that we leave it in a better place than where it is now.
Yeah, like a sense of like justice and equity within the wealth tech industry.
It has to be a higher purpose.
Yeah,
it has to be.
Yeah,
but a lot of others were like, oh, I would love to invest my CPF this way, but it's very hard.
Right.
Like these are very senior people that have been in the industry for a long time, but they were just also so stuck in like, oh, you can't get rid of trailer commissions. If you get rid of trailer commissions, the funds won't sell. This will never work. That was a lot of the conversation.
And I go back to one of my favorite quotes from George Bernard Shaw. There are those that look at the way things are and they ask why. And then there are others who look at the way they should be and ask why not.
Yeah.
And I think that's kind of the mentality that we both have and the whole team at Endowus has is that, look, it is broken. It is misaligned. It's being missold in a way. And then people are like, why? Like, why can't we do better? But no one's willing to put in the hard work to actually develop a new platform and a technology and a new way of doing business that's going to actually help everybody, right? And so, I think we are leading the path towards that end, and we're asking why not? We can do this. It is possible. CPF investing, when we looked at it from the get-go, we realized it was possible, even from within the regulatory framework that existed. And so that's why we built it, because we felt that it was something that we can go after, that we can change, and we have to do it.
Yeah.
And it's not just CPF, but CPF, SRS, cash. From cash, it's from managing very short-term money in institutional quality money market funds, for example.
Money market funds wasn't a thing when we started.
That's
and
crazy
we really, money market funds really took off through Endowus. Yeah.
I mean, I would say even personally, because all my stuff is really in the U.S. and I have access to Vanguard and E-Trade and whatever. And so I've actually never really felt compelled to do much with my cash sitting in Singapore. Also because I never thought I'd be here this long. But anyways, But actually watching y'all's evolution, it started off like very CPF heavy. Your messaging was very CPF heavy. I'm like, okay, that's not for me. But I would say like watching the evolution of your product and your platform, I'm like, okay, I feel like actually I need to be doing something now.
Yeah. So, but we're called Endowus, and we've never changed the name from the get-go because it stands for endowment investing for all of us. And the endowments are, for a long time, they've been the kind of gold standard. Of course, there's a lot of variety within the endowments, but they've been the gold standard on the process of investing. Now, a lot of people look at the headline numbers from like the Yale Endowment having an incredible return for a very long period of time, and other major school endowments. And I think a lot of people focus on the wrong part of that, which is that they were really allocated to venture and hedge funds and absolute return and very well diversified and all of that. But actually, if you listen closely to what they were doing, and Swenson was the CIO for that period, he had mapped out the future liabilities of the school, where they would have to spend money, and pulled that back to how they should be asset allocating today to meet those liabilities. Because he knew that as a steward of capital for the school, his mission was not to grow the endowment to be as big as possible. His mission was to allow the school to make the investments needed so that the school could be better and better.
Interesting.
And that is what we want to bring, or that's what Endowus has been bringing to the individual through our entire journey. We're a goal-oriented platform. We want people to understand what their goals are today. We want people to understand what their goals are today, what their needs are in the future, and then bring that back to their current asset allocation. So in the investment world, they call this liabilities-driven asset allocation. A lot of people don't do it this way because obviously it doesn't, the business models of the existing world that are churn and commission-oriented, product pushing.
Yeah, it's very short-term oriented.
Very short-term oriented to generate as much revenue as possible off of client money as quickly as possible.
Yeah.
But so you really needed something first principles like Endowus to make this possible. And selfishly, we wanted this product for ourselves. And we saw that missing in the market. So, even what we're doing in the alternative space, hedge funds, private markets, it's all been a part of the original business plan, because for that money where you have longer time horizon or you want less volatility or whatever the goal is, they fit into your portfolio.
Yeah.
Can I share two founding stories since we're talking about the early days?
Would love to hear.
One is that you mentioned Vanguard.
Yeah.
So we were going to originally launch with Vanguard.
Oh, okay.
Here in Singapore. And I think it was maybe, very close to the launch date or leading up to it, Vanguard decided globally to pull out of Asia.
Oh.
And it exemplifies the problem, right? It's the fact that Vanguard, which is one of the best fund managers in the world, they developed the low-cost passive index funds. They developed the mutual fund model where actually they don't make as much money. They give it back to the mutual fund unit holders, right? And so they did so many wonderful things. They're the leader. They're the most values-driven company that you know. And they couldn't penetrate Asia because the distribution of these funds
was so difficult.
Was so dominated by banks and channels that were only looking for those commissions for selling these funds. And Vanguard and Dimensional are the two fund managers globally, are the only two that refuse to pay commissions to sell their financial products so that their alignment is true.
Wow.
And that's why we wanted to work with both of them.
Right.
But unfortunately, Vanguard pulled out. And it was hugely disappointing and a massive setback for us, right? Imagine launching with Vanguard versus not having Vanguard, right? But what it did for us was it solidified our commitment because the problem was so real that even Vanguard is giving up, right? This is a problem we need to solve.
Right.
So I think that was the first story. The second thing is that as we built the business, it was very clear early on that it would either work or not work. It was a 0-1 thing, right? We get CPF, we get, individuals to buy into the idea of conflict-free, independent kind of wealth, or no one's going to, buy
You're like,
into
whatever.
it.
The system isn't broken, so
isn't broken.
don't-
Likes to
don't
working.
fix it.
I still want to use my bank,
Yeah.
whatever. And we end up like Vanguard. So what we did was
I didn't know that was an option, Sam.
that was not an option. It was just a reality that was a possibility. But what it meant was that for 2 years we were building technology, we were building the infrastructure, we were building the inroads into the government of Singapore and other channels through which we can enable this business. And that's why we actually didn't go out and raise externally. Greg and I put in our own life savings. All of our employees actually put their own money into the business, which is crazy because we would hire people and they would give us money to build the business, which is, unthinkable.
Yeah.
Well, it's all about positioning.
The messaging was better than that.
The messaging was pretty good.
You pay to work here.
Yeah, the privilege to work here on this important problem. You have the privilege to invest in the company.
So
Much better.
it's so
So
important to have skin in the game.
Yeah.
Employees, as a result of investing in the business and building it together, have succeeded in building their own wealth, right? Because Endowus has grown and succeeded. And they took the risk, so they should be justly rewarded. And the other thing is that back then in 2017, no one wanted ESOP, like especially engineers.
Yeah.
Who wants ESOP?
Yeah.
There was no successful exit for an employee of a tech company making money out of ESOP. And therefore, it was very difficult for them to convince them to take free shares. So we got them to buy shares instead.
You're like, I have a solution here.
Yeah. It's just the charisma of Greg and myself, persuading people to join us and then give us their money. But that's what allowed us to really build with a long-term perspective.
Yeah.
It's what allowed our employees to really not just talk about, being owners, but really act like owners of the business. And we have one of the lowest turnovers in the engineering staff. We have long tenures. Yesterday, we were giving, cards out to 5-year, 7-year tenured employees and beyond.
Company hasn't been around for much longer than 5 years.
Yeah. So, and also, for 2 years, we built and then launched the retail, CPF service and went full retail. But for 4 years, we actually bootstrapped and we just kept raising from ourselves.
Yeah.
And because we were that committed, we really believed in the mission at hand. And then as we scaled beyond that, we received external funding.
It's amazing. I kind of want to dig into y'all's co-founder dynamics a little bit more. So would love to hear, you've been working together for 8 years now. So originally, what you thought of each other and then how you wanted to present yourself and versus when the honeymoon phase was over a little bit and when things that surprised you about each other as well.
Now we live in different countries. We're much better now. No, just kidding. But
we're still honeymooning.
Yeah, we're still honeymooning.
Long
It's so
distance,
early.
That's so
a long
sweet.
distance relationship.
Yeah. Distance makes the heart grow fonder.
100%. 100%.
No, I think, first of all, we got along really well from the get-go.
Yeah.
But we're very different. And that's sometimes good, but mostly good, but sometimes bad, right? So there is a little bit of conflict. But the other thing that made it not a problem that this difference exists is because we actually really respect each other, right? We respect the fact that we come from very different backgrounds. We have very different age groups.
Sam's old.
Greg's let me go on the record.
Older.
I am old.
Older.
I am old. Absolute and relative. But I mean, I think that's the foundation of respect is really important, right? And then the other thing is early on we carved out our respective kind of pieces.
Okay.
So there's the spaces that I would control, Greg
What
would
are
control
those?
and lead.
Yeah.
So Greg would be technology engineering because he has that background. He was a grab. He has, experience launching multiple products across the whole region of Asia. And he's worked with engineers and built product himself. So he has that experience that I don't have. And then I have a lot of experience from the regulatory kind of traditional finance and especially asset management business. So the way we divide it up is Greg has engineering, product, marketing, and operations. And then I have the investment office, the client advisory, the business development and partnerships and finance type stuff. So we split that up quite early and defined it. But we don't like say, well, that's your space and you need to do it and I need to do this. We actually work coherently and we speak into each other. We actually interact with the team all the time on both sides. And that's what allows us to both add value to each other. And then we had this tradition before Greg went off and to Hong Kong. Every Monday morning, first thing, we would have a date in the middle. We lived quite close by, so we would meet at the cafe in the middle between our houses, and we would just walk over, and we would just meet every morning, 9 a.m. or sometimes early, sometimes later. But Monday morning, first thing, we would align first, and then we would start the week.
That's great.
And so that was a great tradition, I think, and we still do that remotely.
That was a good tradition.
But the meeting is not. I mean, virtual is not the same, right?
It's not the same.
It really isn't the same.
very
But
hard.
yeah.
Greg, anything about Sam, like differences between first impressions versus...
Apart from being old and looking so young when you first met
You're
me.
young at heart.
I mean, I think first impression and sort of the way I feel today is not too different, actually.
Okay, you see what you get.
Yeah, you
I
do.
mean,
There's only one Sam.
there's only one Sam. I think it's, I think what we have developed over the last 7-8 years is a lot of trust in taking care of, what we have to take care of. And we do really share the ownership, but we're not territorial about it. And I think it goes back to like, even within we have human client advisors at Endowus. And I think in most setups, they're paid on the size of their book or the number of clients that are,
Or the commission they generate.
or the commission they generate off that book, or the revenue they generate off that book, or whatever it is, where we don't do that. So everything is team-based. So that, and you can see it in the way they collaborate on hey, I have this client that's, wanting to do this, and they share knowledge. So like within Endowus, there's a lot of transparency, but it goes back to actually foundationally where the business model is. And it resonates all the way up to, I think, even between Sam and me.
Yeah.
And our ability to sort of, co-lead
And we have very flat structure. And so, we have an age gap, we have differences, but like we're pretty flat. We're just very open and transparent about everything. And the whole team sees that, and the team's like that too. So the team loves making fun of Greg and me all the time, and we make fun of each other. And I think that's a very different kind of environment, and it sets a tone, I think, for the rest of the team as well.
How do y'all disagree?
The funny thing is that it's very, very rare for us to disagree on something, first of all.
Okay, that's
Because
pretty
when
good.
you're aligned to doing something that you both believe in so passionately, and you want to always do the right thing, then the alignment is always there, and therefore the disagreement is going to be about not the big things,
But the
but the
execution,
small
yeah.
things about execution or the design or the size of the font or, pixels that Greg is very infatuated with.
I'll take credit for those things.
Pixels, okay.
Yeah.
It's important.
No, Greg is what I call the chief aesthetics officer at Endowus because he's much more and I'm not. So, this wonderful cap that he's designed, amazing, love it. But yeah, so that's his job. Yeah, I would never get involved. So there's a lot of things that naturally fall, like things that I would love to do and I do.
I'll get
and
very annoyed if something's off by a pixel.
and I'm like, yeah, whatever, Greg, you decide, So there's a lot of that. But when the disagreement does happen, I think we talk it through and we normally
Are you
That's
like
very
verbal
pretty easily.
communicators? Are you slacks?
We
Are
don't go
you-
to sleep angry at each other.
That's
Yeah.
good. That's good.
always the right answer for relationships. Any
Yeah,
type of
exactly.
relationship.
That will never guide you wrong.
Yeah.
Yeah. I don't do that with Greg.
Usually, I think usually we'll talk it out.
Yeah.
I don't think it's.
Yeah.
We're not.
You talk it out.
No, the other thing though is that we talk it out and normally we would align, But sometimes one would feel stronger and say, look, I really want to do this.
Like
and the
higher
other one
conviction, yeah.
respects it. And
yeah.
so we've never
Agree
had
to
a case.
disagree at times,
agree
too.
to disagree. But I don't think we've ever
We've
really.
never had a really bad case.
Yeah.
Okay,
I don't
that's
think we
awesome.
have.
A really bad case.
Yeah.
That's great.
But I think it's also helpful that we're both very different.
Mm.
So we, and our personalities are not like, some relationships, those two personalities are both very strong and they like to
clash.
They like to clash and erupt. But it's actually because they're very similar. So I think because we're different, we're always coming at things from very different perspectives.
Who's the more chill one?
We're both pretty chill.
I think we're both pretty chill.
Oh,
Yeah.
okay.
I think we're both pretty chill.
I mean, I'm slightly more emotional than Greg, I think, because Greg just has no emotion. No, I'm just kidding.
I get that from my wife too.
His two closest people.
Yeah. It's like,
Do you
I'm just
not
kidding.
feel it? Like you actually don't feel the.
No, Greg is very cerebral and logical. Like he's
you're
very
just like
pragmatic.
processing all the time.
Yeah, so he's a utilitarian as well.
I'm a
Okay.
pure.
So those
I'm a,
things,
I'm
yeah.
a very pure utilitarian.
Oh, okay.
Yeah, so
Yeah,
it's-
I'm like
I am
totally-
too. I'm pragmatic, but I guess I
But
have
you
a
have that-
little bit more.
Yeah. Okay.
Yeah.
Can you share about like the hardest decision or period of Endowus to date? Like an episode that
Yeah.
tested you two as co-founders or tested your resolve or vision?
Well, since this is tech in Asia, I think, tech companies, especially in this region, the toughest time I think is post-21 bubble, 22, 23, when all financial markets were struggling,
Yeah.
venture funding was drying up, and VCs were pretty hard on all tech companies to reduce cost, have a clear path to profitability, and, unfortunately cut people as well. And for us, having grown with our own money and we've built, an ownership culture and almost like a family kind of atmosphere, although we don't want to call it a family. We're like a professional team as well as a family, as well as an organization, all of those things. I don't want to be like black and white with that. But having said that, we have deep connections, right? That goes beyond just work relationship. And so it was really difficult when VCs and investors pushed us to cut people. And so, the way we kind of overcame that challenge is, and again, I don't think Greg and I ever had a disagreement on that, maybe in the kind of the final shape and scope of it. But we ended up just deciding that, hey, why don't the leadership step up and say that, look, we can take a pay cut instead so that we can convince the shareholders. Because what the shareholders want is not just to cut people, but just get to a lower cost base
Yeah.
so that we can have a path to profitability. And so if that's achievable by us taking a pay cut, then that's, another way to do it. So we spoke to shareholders, we talked to our leadership, and the leadership actually took a combined average pay cut of 30% plus to get us there. And what happened was amazing because when we announced it to the whole team in our regular bi-weekly all hands, where we share transparently everything to the whole team, the team actually stepped up. Many of them who are managers or more junior people said, hey, I want to do that
They
too.
also volunteered. That's amazing.
And take a pay cut. And Greg, came up with a great idea that we should not just penalize them, we should actually reward them. And the way to do that right is to give them ownership. Let's give them more ESOP to compensate for that. And so, we cut cost, we used some of our ESOP to compensate them, and we came out of that stronger as a unit, as a business team. Yeah.
It's a great way to make lemonade out of lemons.
Yeah, and we were also trying to, just on the ESOP
Yeah.
portion, we're also trying to really change the perception of ESOP in the region.
Yeah, of course.
And, whenever we have an external round, or even when we don't, we've been facilitating secondaries.
Yeah,
to
I was going to
happen.
ask about that earlier.
Because I think what happens to a lot of people in the startup space in this part of the world is they don't fully understand how the whole ESOP thing works, which is why, like, when we were hiring engineers and hiring product people and in general that have been at other startups, they're like, oh, ESOP, I don't want that.
Yeah, like never seen it work before.
Yeah,
Why would it start working now? Yeah.
Exactly. That's like not. I put a 0 on that.
Yeah.
And first of all, we think that's really sad because you join a startup because you think it will grow at a much faster rate than the general industry, and but we need to show people realizations of it. We need to educate people on how vesting works, how exercising works, how that triggers potential tax liabilities, why you might want to, when you have exercised your stock and you are therefore an owner of the company, what options you have. You can and giving a window for a secondary to actually happen.
Yeah.
So I think we've done probably 5 or 6 secondaries.
That's
Almost
awesome.
every single year. And I have to
That's
give
awesome.
credit to Greg because he came up with the original idea, and we've continued to refine that. And this is the thing, right? As founders, when you're value aligned, it's easy. Greg raises that idea and you're like, that's a great idea.
Yeah.
And the other thing is that we don't try to benchmark, Silicon Valley or other successful entrepreneurs or unicorns, because the context is different and our business is different. Our people are different. They're incentivized by different things. And therefore, we want to approach everything from first principles and say, what is right for us? And so why 4-year vesting? Why does it have to be 4 years? Why can't it be 2 years or 3 years? Why can't we do secondaries every single year and provide liquidity to our employees?
Yeah.
And by doing that, we've had a great tradition of employees saving up their money and then buying more shares every single year.
So a lot of those secondaries actually stay internal.
Yeah.
So we prioritize employees to employees.
Yes.
And then from there, if we have more secondary supply, we'll go to existing shareholders and then.
And also new shareholders, new institutional investors who are buying into the company can take advantage of, secondaries at slightly discount. So we facilitate that. And so some of that secondaries goes to institutional clients too, and that limits dilution for everybody. And so that's another win for us as well. So secondaries is a wonderful tool for us to do many different things that is beneficial to all shareholders, new and old.
Okay, so I think just a few more questions for me. So one is, obviously AI is everyone's talking about AI, everybody's building with AI. Between that and some of the other macro forces that you're seeing in this space, what's the one thing that you think that Endowus has to get absolutely right now, in the next 6 months time period, in order to properly set you up for future success? And I led the question with AI, but your answer doesn't actually have to be AI.
I mean, we've been building with AI for quite a few years now, so that's nothing new, and we're obviously, in a great position to take advantage of, continued ecosystem improvements there. We view AI as just another way, or and potentially a better way to serve clients at scale, and really deliver excellence at increasing scale into the future. We are working on it, but I wouldn't say it's mission critical for us. I think it's, of course, we want to drive cost efficiency, productivity within the team, and we've been doing that with AI already, and that will continue to happen. Client adoption of AI will take time. I think if we take not 6 months, but a slightly longer time frame, if we can develop the right experience, the right prompting, the right guidance and rules around the AI, if it can deliver better financial outcomes. Because ultimately, I think we need to remember that Endowus is a wealth tech platform. So we need to get the wealth part right, because that's ultimately the good that we are it's the service that we're actually delivering. So if AI can facilitate us in providing a better experience to ultimately deliver a better wealth outcome for clients, we'll be in a fantastic position. But I do think it'll take a little while for that entire cycle to play out.
And part of it is the fact that we're in a regulated industry, right?
Sure,
and so regulation has
Can't just be tossing out
we can't just toss out AI and
vibe-coded
giving advice.
feature.
Yeah. So I think that's the part that needs to, come into proper shape before we can apply everything we've done into that, within that regulatory framework.
Yeah.
And we've invested very heavily in AI. We launched our chatbot more than 2 years ago. So we've been building up a lot of expertise and content and interactions with our clients to achieve a better outcome for them. Longer term, I think, where we're laser focused, it just goes back to the fundamentals. I think we don't want to lose sight of why we started, why we exist, and why we do what we do, which is to serve our clients, right? If we serve our clients well, they will tell us how we can apply AI. But also, that's going to be mission critical to, the success and sustainability of the business of Endowus. And that's all we need is our clients.
Yeah, I think a good way of thinking about it is like we could build the most amazing AI experience, but if it doesn't lead to better financial outcomes,
Right.
it's useless.
Right.
Yeah.
Because you're not an AI company, you're a wealth company.
Well,
Yes.
yeah,
Digital wealth
I
platform.
mean,
Right.
heart
exactly.
of it.
Yeah.
But I think even for the AI companies, they need
Yeah.
to be delivering a better something experience to stay in the game.
Yeah.
Yeah.
We know exactly what we are,
Yeah.
and that we focus on delivering better wealth outcomes. But it's systematic from the ground up, right? From our foundation of being conflict-free, that flows into the types of products we bring on, what the investment office is creating, what they're curating, and bringing onto the platform. We now work with 100 fund managers, global fund managers,
Yeah.
and make their strategies available to our different segments of clients, from the retail to the high net worth to the even institutional. Now we're managing money for churches, family offices, school
Even
endowments.
That's awesome.
And so Endowus,
Yeah.
I mean, is kind of like
It's like full circle.
it's full circle.
Yeah.
It's really full circle. And I think what's incredible is, as we've been scaling up in the last year, these different segments have been seeing how to apply our platform in more and more ways. So our smallest client, starting with $1,000, we still keep that open. We're still improving and working on the advice that they can get, the types of solutions they have access to when they onboard, the speed and fluidity of that onboarding, and all the way to our largest clients. We have now quite a few clients over 100 million using the same Endowus platform. Obviously, their team interaction is different, but for us, we're just like, we want to deliver the best wealth experience possible.
Yeah.
Right? We're not, yeah. And there's tons of opportunity through that entire spectrum.
Do y'all think about potential exit opportunities? Is it something that's so far away from your mind? I mean, again, I feel like this is something investors must be asking.
Yeah, no, it's funny. That's another thing that strangely Greg and I aligned on very early, and it goes back to our belief system and our values that some of the best partnership businesses, whether it's in the legal field, investment banking, or even consultancy like McKinsey, are partnerships. And in a way, we've created that with our employees buying into that idea of ownership, right? And then we believe that the people who contribute to the growth and success of the business should naturally be the owners of the business as well. So despite getting a lot of external investments, employees still remain the largest block of shareholders, including not just the founders, but a broad, long tail of employees who are owners. And I think that as people step up and grow the business, it's natural that employees should actually own more, not less, as time goes by. And so IPO is great, but I have a public market background. I've invested in a lot of companies in the public space, and I sometimes don't understand why some companies are public. Like, why do you have to be public? Just to go there and hit a gong or ring a bell? Because that's not an incentive for us as business owners and leaders of an enterprise. And so our goal is to continue to build the business. Scale it to massive profitability. We can live off of the dividends forever. Our employees are owning and controlling the future of the business. If it's public or private is not as important to us.
Yeah.
So exit wise, I think we're in it for ever, really.
Yeah.
And as long as our people will have us,
17 more years, I think, at least.
And then, well, Greg is younger than me. Remember, this is just
true.
me.
True.
Greg in another 25 years from here, at least.
We'll have an AI agent of Sam by then. So
Yeah.
I don't know if it will be the same, but yeah.
Okay.
Maybe we can have a hologram of me in the office. Permanently.
I wanted to end off with a quick game of superlatives, which is it's like the newlyweds game, but I'm just going to say a superlative and you have to point at whoever's more likely to do it.
Okay.
Get it?
Okay.
This is my favorite dinner
Okay.
game, dinner
Great.
party game.
I've never
I only
played
have
it.
a few.
Okay, got it.
Okay. Who's got more unread emails right now?
100%.
Like how many? Like what are you in the thousands or are you in the hundreds?
But I have a lot of junk email, it feels like.
Yeah, but you don't delete them?
I just can't
Savage.
be bothered.
I'm an email clean out
Yeah, me
person.
too.
I'm not.
I'm like,
So like what's your
Why
number
bother?
at?
I don't even know that.
he's why bother? That's the
Yeah,
answer.
why
terrifying.
bother looking at the
Okay,
number?
good to know. All right. Who's more likely to send a message at midnight with a crazy idea? 3, 2, 1.
Probably me.
Okay.
No, that's probably right. Sam does it too, but
Yeah. But
You're
probably
more likely
Greg.
to do it.
Yeah,
Okay.
slightly.
Who is the biggest risk taker when it comes to your own personal finances? 3,
I think
2,
Sam.
1.
definitely.
Maybe, yeah.
Yeah? Like, what are you
yeah.
investing in?
I've done crazy stuff in the past, I think. I've shared with Greg. Yeah.
Like what?
Well, I mean,
random
he
stuff.
found Endowus because he was doing all these early
Right.
stage fintech
Yeah.
investments.
Yeah.
Right?
Yeah.
I've done a lot of like angel investing into businesses,
Yeah.
moonshot ideas.
I was going to say,
So I'm
fintech's
a
not
bit of
exactly
a-
like that. I mean, it's angel
Well,
investing. It's risky. It's risky, but it's not
90%
like
would go to zero
crazy.
as well. Same as
fair
any
enough.
venture
Okay,
business.
fair enough. Okay, who is more likely to lose their cool in a meeting? 3, 2, 1. Yeah, I mean,
He has no emotion.
Yeah,
It's like marginal, but yeah, I guess, yeah. I never lose, but yeah.
Oh, okay. We can survey the team on that one.
Okay.
Okay, who is more competitive? 3, 2, 1.
I don't know.
Oh, this is a tough one. Like,
Because you're
even.
both competitive,
I
or
think
you're
we're
both
evenly.
not
I
competitive.
think we're evenly competitive.
Yeah.
Okay.
I think
I
we
wouldn't-
pretty much
on
the
same
same.
things or
Yeah.
on different things?
Yeah.
Like sports versus work versus.
Pretty much everything.
Yeah, probably everything.
Yeah.
Okay.
Probably everything.
But we're both like not super competitive.
You're just
we're like
like
we
so-
manage
you're
it.
like-
we
you're just
reasonably
competitive.
We're not
competitive.
like the hyper.
Yeah, we're not
Yeah,
hyper
right.
competitive
Yeah.
guys. Yeah.
Yeah.
Probably a good thing. Okay. Who's more likely to jump first and look later when it comes to a big decision about? Okay.
Yeah, for sure. The other thing is I'm an optimist. He's a pessimist by nature.
Oh,
which also
interesting.
balances each other out.
But
quite
we're
well.
both, what do you call it? The P, right?
Yeah, so we did this
Perceiving versus
MBTI
judging.
thing.
Yeah,
we did
yeah.
MBTI thing. We had like 15 leaders within the organization. And Greg, myself, and one of our early co-founding team member, Sinting, were the only 3 Ps.
Oh.
Everybody else was Js. Which is probably a good thing. Startup founders,
Yeah, you gotta be a P.
You gotta be a P kind
Yeah.
of.
Yeah.
But you need Js to execute and
So
build.
I'm a
and
pessimist P. He's
I'm an optimist P. Yeah. I don't know what that
Optimist
means,
prime.
Greg, but yeah.
What's your full MBTI?
I actually don't remember.
We're
We
not
only-
big
we only
MBTI
remember the last
guys.
one.
Yeah.
I am IN a TP or FP. So INE kind of is always like balanced.
Okay.
So I think I was born an I, developed E,
Okay.
and then the TF thing.
Yeah.
My wife calls me a T with a mask of an F. So I've learned to be F, show empathy and feeling, but I'm naturally not.
No way.
The robot
Yeah.
has learned to love.
Yeah, the robot has learned to love.
Oh,
And that's where
wow.
you're going to get to, Greg. Is the ultimate T.
Okay, that's actually all I have for superlatives. Do you have any more that you would like to call each other out on? No? There's always more.
No.
You two know
No.
each other so much better.
Although that was pretty accurate. I
was
think
pretty
our
accurate.
reactions
Yeah,
were
yeah, yeah.
in line. Yeah.
Okay, cool. That is all for today. Sam, Greg, thank you so much for joining us on the 60/40 podcast. This was a really fun conversation. It was great to learn more, of course, about Endowus and what y'all are building, but then also, your own co-founder dynamics and your vision for the company, which is really like so drastically different, I think, from a lot of other companies that we talk to and cover. And so it's just amazing that you both have had that vision from the beginning and you've been able to make all these strategic decisions about, how you're building the company, how you're raising capital in order to help service that bigger vision and goal. So obviously wish you all the best and hope we can do this in 5 years' time. And, y'all are telling me about
Amazing
all the
things that's
amazing
happened
other
since.
things that you have
Yeah.
been building and your, 100 billion
100 billion plus,
under
yeah.
management and things like that.
Thank you, Maria. It was a lot of fun.
Yeah,
Thanks for
thanks,
having
Maria.
us.
Thanks for tuning into this episode of the 60/40 podcast. You can nominate topics and speakers to us at 6040podcast@techinasia.com, and we will review them and get back to you. Thanks, and see you in 2 weeks' time.